Alright guys, welcome back to my channel. For the new subscribers, thank you for subscribing. For the viewers, thank you for clicking this video. So in today's video guys, I'm going to be breaking down the power of following a trend, especially during New York session, which are these red bars. And as you can see guys, literally on Friday, price did this humongous move here, and I'll literally break down how you would have actually caught this move here. So let's begin. So basically guys, in one of my previous videos, I was saying that in order for me to consider NASDAQ bullish, I would wait for price to break this and close above this body close here, above this candle here, which it did, right? So which it did with this particular candle. So how I would have actually marked this chart up is to literally create a box using create a freaking demand zone. So from the body close to the top of the wick, right? And now all I'm doing right now is basically following the trend. And the trend, guys, like I said, is literally this. It literally has to follow this pattern. Literally has to follow this pattern, guys, right? It's not breaking any lows and it has to follow this upward pattern. So that's basically what it is. So in this case here, price came, created this indication that price is going up, right? And we have to understand, guys, we're in session at this point. So around 8 o'clock, 9 o'clock, price created an indication and then sold back down. And then around 12 p.m. this would have been your entry right here around 12 p.m. So this is basically how you would have entered this particular move if you were trading in session, New York session, and NASDAQ, just NASDAQ 100. So in this particular move, you would have made like 3% here. Now, basically, when this high was created, this was the low that created this high. So I would have to wait for price to break past this low for me to start thinking of selling. But in this case, I'm only looking for buys. And when I'm looking for buys, I'm looking for buys above highs, right? So above like the wick highs. So above these wick highs here. So like above this wick highs, above this wick highs. So in this case here, New York session comes in and we get price above this wick high. So on Tuesday, you would have probably lost this trade, as you can see, right? You'd have probably lost this trade. Now, when price sold back down, if you wanted to enter, you'd have entered again, thinking, okay, yeah, price is, basically still buying because price did not break structure here. It didn't really close below this previous low. If you really zoom in, right? So you would have probably lost again here if you were to risk, or you would have said, okay, only one setup for the day and I'm done, right? Depending on what your plan is. So let's assume you actually, took a second trade. So now you're down 2% for Tuesday, but in total from Monday and Tuesday, you're up only 1%. Now price now officially breaks this previous low. So what that means, guys, is I'm literally removing all my joints and then now marking the previous low that price broke, which is this one right here. Literally this one right here. Now, as you can see, when price broke this, we now marked our lows here on the downtrend. We're now expecting price to basically do this now in a downtrend, right? Downtrend is like this. Boom. So we don't want price breaking above the highs here in a downtrend. So in this case, even outside of session, right, was where price actually changed trend again, right? So in between like Monday to Wednesday, it changed trend like 3 times or so, right? So it created this low, created this high, created this low, created this high, but then it was meant to create a low, indicating a downtrend, a continuous downtrend. But in this case here, this candle broke past this high, this body close, indicating a change in trend. So how you would now mark this now, instead of now keeping this, you now then remove this and then mark your highs here, boom, like this, right? Now you're waiting for price to give you this same pattern, boom, boom, and then now you're entering when price breaks past this high. So in this case here, price gave you that upward momentum, which is the indication, retraced, correction, and then in the 5 minutes or the 1 minute or the 3 minutes, whatever time frame that you like to use, wait for a break of structure in those time frames, 1 to 5 minutes, and then take your entry, stop loss below the low, and then you would have caught this trade and cut another 3 again. So right now you're up 4%. So you won 3% here, you lost 2% here, now you're up 3%. So in total you're up 4% already, right? Now price is kept buying up. Same thing too. It didn't really, yeah, so it kept on buying up. And then all of a sudden here, right? So even on Thursday too, on Thursday it kind of gave you an entry, right? So it basically retraced back down to give you an entry. So on Thursday too, if you were paying attention, right, price actually literally came back to where your entry was. So you would have either took the risk of risking 1% or risking 2%. So let's say you risk 1%, then you would have been up again by like another 3%. So in total you would have been up 7% basically, right? And that's just Thursday. Now on Friday, right, or before Friday actually, price comes, create this high, retraces back, and then creates this high again. But then if you notice, the low that created this high, this was the low, right, that created this high. So when price now broke past it, which was right here, when price broke past it, all you are doing right now is just waiting for your entry, literally. So when price broke past it, remember guys, we are marking our highs in the sense that like it's an uptrend. So it was uptrending. So we're marking the highs and stuff like that, like this. These are the highs we are marking, right? And then all of a sudden, it created this high. We wanted price to retrace back down here to then now continue the upward momentum, which is an uptrend, but it did not. It retraced a little bit, went back, created another high, and then broke past the previous low that created the previous high, right? So in this case, we would have now removed all our drawings and then now update our analysis and do this and mark from the body close, right, to the end of the wick. Boom. Right, so I actually used this particular body close here because it's way smoother, right? So I actually use this body close here. So from here to here, it's actually because it's way smoother in my opinion. So as you can see, price came, created an indication, bought for like 2 hours, and then gave you an entry here. So on Friday, if you were holding, you'd have easily eaten like probably 8%, depending on if you're risking at least 30 pips or so. You're probably eating good that day, so you probably got like 8% on that one trade. So now 8 plus 7 is already 15, so you're already up 15%. So this is the power of following a trend, guys. Make sure guys to subscribe to my channel. Thank you again for watching this video, guys. Make sure you guys always follow the trend, you feel me? Using the 1 hour time frame. That's basically what I use to follow the trend in the 1 hour time frame. And I'll see you guys in a different video. Peace.